What's up, everybody? This is BRT Elite Members Recaps Fridays. Uh, Today is Friday, April 26th. Last week before we start the new season of Finding Your Way, um, Toad Toad Sage is going to be the next participant, and we'll get started next week. For this week's lesson is about. We'll dig deeper into volume profiles as well as scaling up. I've been asked a few times, well, when is the right time to scale up? Um, UpGab had just shared his insight of when should be a good time to scale up. When I first started out with my $600 small account, I had a monthly goal, and that monthly goal was to double my account size. And if I did double my account size, I would increase it by one contract just to some people are against having a daily goal or a profit target or monthly goal, but the way that I see it is if you don't know how to measure your success, then you're probably not going to know when to scale up or when you're going to feel comfortable to scale up. And that's why how I came up with this system to scale up, especially if you're starting with the small account. If you're starting with 600, $500, you want to take it slow. You want to prove that your strategy works. And there was a video that I ran across that pretty much said if you don't have goals, then you don't have nothing to measure your success on. If you have nothing to measure your success on, then how do you know when to scale up? When would you feel comfortable scaling up? So that's why I came up with this, I guess, strategy or system on how to scale up. Like I said, at first I had a monthly goal, and that was still a little bit hard. Even though I doubled up my account size the first month, yeah, I went from 600 to 1200. The next month, I wanted to double it up again, but would I be able to scale up fast enough to double up my size or to double my account again? So from 1200 to 2400. Um, so that's when I read a book that kind of teaches you how to set goals. That book explained, you need your long-term goal. So your 10-year or your 5-year goal, whatever your 5-year goal is, and then break it down. So from 5 years, break it down into a year. From a year, break it down into a month. From a month, break it down into a weekly. From a weekly, break it down into a daily. So that's pretty much what I did. What I wanted to do is Brandon would always say $1,000 a day to keep the job away. So that was my goal was, okay, I wanna get to the point where I'm making $1,200 a month at first, right? So that was like my 5-year goal. Then my year goal was, okay, every month I wanna I wanna double my size count by the end of the year. And then the weekly goal, I wanna somebody ask a question. Um I wanna double it, right? So I went from my 5-year goal to 1-year goal, 6-month goal, monthly goal, weekly goal, daily goal. So I took $6,000 goal, broke it down to the 6-month goal. Then I just kept dividing it, right? So I was basically dividing my goal, whatever your goal is, divided by the amount of months, right? If you start at years, so you divide your 5-year goal by divided by 5 because it's going to take you 5 years to get there. Then from there, you divide it by 12 months because you want 1 year to divide it to 12 months. And then from down there, you would divide that by 6 months. And you just keep reducing it. I went from a $6,000 goal to a $25 daily goal to be able to hit or be able to measure something. Once you get your measurement, then that's when you start to figure out if you're ready to scale up. The way it works is, and I've tried it a few variations. If I can hit my daily goal, and this is me taking at max four trades per day. You don't want to trade more than four trades a day. If you trade more than that, then you're most likely over trading. Um, you should be able to hit your goal. So my whole thing was reach my daily goal with four trades, whether it's one red, three green, or two green, one red, or whatever it is. And what you want to do is hit your daily goal with the least amount of trades. So if you hit it with four the first week, every day you hit your daily goal with four trades, your confidence starts to go up. But the next week, you hit your daily goal with three trades or two trades a couple of times. Then your confidence you start building on that confidence to make you feel a little bit more comfortable going up one contract size, right? So instead of $25 a day, so I hit for 2 weeks, 2 weeks straight, I just concentrated on hitting my daily goal with four trades max. So if I did that, I would feel a little bit more comfortable. And not only that, but I almost, because $25 a day for 2 weeks, that would almost get me to half of my monthly goal, which was to double the 600. So in 2 weeks, I hit $250, right? So the next 2 weeks, I would increase my daily goal from $25 to $50 and increase my contract size from one contract to two contracts. The other thing that I implemented was instead of going from with one contract, I was my goal per trade was $12.50. Because with $12.50 per trade, that means that I would only need two trades to hit my daily goal. And that was my ultimate goal, was to hit my daily goal with one or two trades, right? So that's the way you do it. So you break it down from your 5 year, 1 year, 6 months, monthly, weekly, daily. After your daily, you break it up into how many trades you're willing to take. So if you're able to trade 4 times a day, then that's what you would divide it with. But if you have a job and you can only trade 2 or 3 times a day or one time a day, then divide it by that, right? But you feel way more comfortable is if you break that down into, because trading MES with one contract or MNQ with one contract is really hard to hit home runs. The when you start to hit home runs is when you have multiple contracts, because you could close, if you only have two contracts, you can close one at your target or your first target and then let one ride. That's the way you get to, and even though you close that first contract out and you let one ride, you want to keep an eye on the candles. The whole, Brandon always says screen time, screen time, screen time. You want to see how the candles develop. Even if you get profit stopped, you're still going to end up green. Because that's why I love Ninja Traders, because you can attach um, orders, buy orders, or your your exits. You can attach it to a moving average or trail stop. Is what I usually do. Is I'll either attach it to the 10 SMA or I'll attach it to the 50 SMA. and that helps you catch bigger moves. But the whole thing of this is not to catch bigger moves. That'll come later. What you want to do is focus on consistency, focus on building that confidence to be able to scale up. And don't scale up because I was there where I would scale up too fast and I wasn't ready for the drawdown. Because if you say I went from one contract to four contracts, like one tick would be my max daily loss if it went against me. And if it went with me, then of course I'd be good. But you want to feel comfortable adding more contract size. And when we went through finding your way with easy or lasagna can, I was like teaching them how to scale up. I wanted them to see the amount of money the drawdown is, because you can keep your same drawdown, but just keep in mind that, and what I'm saying by drawdown is if you start with two contracts or one contract and your drawdown is 2 points, then you can keep it at 2 points. But when you have more contracts, with with your one contract, that's only $10. And with two contracts, that's $20, right? And so on and so forth. Um, but you want to be able to build upon that without having and you want to get used to the drawdown. So you're not scared and you're not fearful of it going against you. Because once you get in a trade and you start getting those nerves and you start getting nervous that it's going against you, then you're gonna either get chopped out or wicked out, where it's like, man, I should have just held on. And that's why you build that confidence of hitting your daily goal. You hit your daily goal, you hit it with less trades, you're going to build that confidence and that consistency way faster than if you don't have a daily goal or don't have a profit target, because you have nothing to measure. So if I hit my daily goal for 2 weeks straight, that means that I'm already up 50%. So instead of 600, I have close to $850 to $900. You can increase it a little bit more, to two contracts, or just wait until you double it up and then you'll be good. So then the next 2 weeks, same thing, repeat the same thing over again. You can either do it two ways: increase your daily goal or leave your daily goal, right? Because the first 2 weeks, I hit my profit target within 3 to 4 trades. But the next 2 weeks, if you leave it at the same, you're not going to hit your monthly goal because you're already $50 behind. But if you have two contracts, you can let some ride and you'll go past your daily goal and still keep the same drawdown and still hit your daily goal. Instead of 4 trades or 3 trades, you'll hit it in one trade or 2 trades. Right? So now you got your consistency up and your win rate, or how can I say, your daily goal rate. You brought your win. I don't know how you would explain it. Instead of having to trade 4 times, you're hitting it with 2 trades or maybe even one. So now you're getting used to hitting so you do that for a week. And if you don't increase your daily goal, I recommend it that you do it by the third week. And if you're increase your daily goal to $50, and now now you have two contracts, you're already up almost $400 or $500, about to double your size. Then you increase it to $50 instead of $25, and maybe try to keep that 2 trade max instead of 3 to 4. And if
Good
you can do,
afternoon, gentlemen. Good afternoon.
what's up, Easy?
How you guys doing?
Good. We're right here talking about scaling up and when to scale up and
Ah,
when to feel comfortable scaling up. I know
yeah,
you went through it. We kind of roughly went through it where you were up to 8 contracts by the end of finding your way. And you're
exactly.
like,
Yeah.
that's crazy. I was like, yeah, it is crazy, but you need to be ready for that big green or the big red. Because
Oof.
if you've never seen that, even in sim, if you haven't seen the big drawdown or a big win, you're not gonna be able to control your emotions as good or as try to keep them cool. Because there's been
All
times
right.
where I hit my daily goal with one trade and I surpassed it. Instead of $6,000, I made 64 or 7,000 or $8,000 on one trade, and I was like, wow. It takes a while to come off the ceiling. You're like, fuck, that's
That's an
awesome.
amazing feeling. It is.
But the same thing works too. If it's red, you're like, fuck this. I'm fucking done. Or you just fucks up your day too. And you need to be able to see that. And if you don't see that, then you're not going to be ready for it. If you're not ready for it, you might bag hold and blow up your account. And that's what happened to me a few times. I blew up a couple accounts because I got cocky or I got overconfident because I was hitting my daily goal every day, every day, every day. And then I was like, oh, I'm going to increase it. And I wasn't ready for that increase. I'm going to increase my contract size. And it's, instead of 250 green or 250 red, it's like $1,000 or $500 red. And you're like, fuck, it's going to bounce back up. It's going to bounce back up. And next thing you know, you're fucking $1,000 red or $1,500 red. And with prop firms, it's easily done. Easily. And since it's a prop firm, you're like, I don't give a fuck. This is like play money. I'm only gonna lose $37. In reality, you lost 2,500 or whatever it is, right? Um, and you don't want to be stuck in that. You don't want to get stuck because with prop firms, if you're doing prop firms, you should be able to pass your prop account with 2 contracts max. 2 contracts on ES or MQ or NQ. After that, practice the scale up method. Leave it at 2 contracts until you have a buffer. Once you have that buffer, once you have that buffer
Even
there,
two contract, I find it hard for me to hold even at that level.
it
I'm
is.
still not comfortable to play with two contracts, but on when using one contract, I'm just like not FOMO, but when you take profit, you're like that was my only play, and then you have to wait for the next setup to appear,
Yep.
or sometimes you just miss the whole move.
Yeah, and this whole game is all about patience. You called it out last time. It's like I'm just here sitting and waiting for my play to set up. And if you don't wait for that setup to your play to set up, you're gonna rush, you're gonna force, and you're gonna click the button, and next thing you know, you're gonna get in at the wrong spot. What you always gotta ask yourself when you're about to get in the trade is where would be my best optimal entry? If you're getting in, let's say you missed this move. Hold on a sec. Let's say you missed this move right here because you were scared of getting in down here or even right here. And you decide to get in like right here at the top. It's like 90% guaranteed that it's gonna go against you. That it's probably gonna go this way, or it might pop up a little bit. And guess what? You didn't lock in right here, and now it's against you. When the optimal entry would be, okay, let it wait, pull back to the 50, and then let's wait for a bounce. Or you're gonna be like, okay, if I can't find my best entry, let me fib it out. So I'll fib out from here to this red candle. And now, okay, now I'm not gonna get in a trade. I'm not gonna get in right here because it's in the middle of no man's land, right? There's no fib. levels. There's no moving average levels. When price action's in the middle of nowhere and you're fucking thinking about getting in, not the best idea. What um this crypto guy says, he trades crypto, he says when in doubt, zoom out. So even if there's nothing there, there's right here, right? Um always look at previous structure. If that line right there, right? I wouldn't get in right here to go up. Doesn't make sense. It's at the top. Some of the rules are, never long tops, never short bottoms. Because
Exactly why yesterday I was so bullish on the day.
most of the time, if you get in on the top to go long, like as soon as you go in, it'll go against you. And you're like, fuck. And right away it fucks up your trade because you're already like in catch up mode. And you don't want to be in catch up mode because you know what's the color of ketchup? It's red. You're gonna end up red right away. It's gonna go against you. Um, so yeah, any questions on scaling up or anything that I just talked about? Twitch.
Hey, Sumper.
What's up?
So with so Brandon has the ability to jump. I mean, just a snap of a finger, reverse trend. When he sees the market going the other way. Now, of course, it's almost logical that somebody who's gotten to his level has maybe a higher probability of winning, even if they reverse trend real quick. Do any of you guys, have or at least have succeeded with, all right, here's my play, but I'm seeing, I'm thinking the markets are going to squeeze, but then you see a dump, and then you reverse trend, you play against what your initial plan was,
Oops.
and if so, do you hot button? Do you like maybe just if anybody has had such experience or at least success, share that'd be very helpful.
Yeah, I go by Brandon's. For a new trader, that's really hard to do. It was one of the hardest things to do for me, especially since I wasn't a short player. I, like for the longest time, I never took any short plays, and it was hard for me to switch bias like Brandon does. Because Brandon has been trading for so long that his screen time will help him change bias quick. Or he has indicators that help him change bias quick. And that's what I've been trying to decipher from Brandon is okay, like what did you see that helped you change your bias? And there's been things like a volume beat. There was a red volume beat while it was still going up. So that helped him change his bias. And then after he changes his bias, he looks for a significant level, whether it's a daily moving average, weekly moving average, whether it's a hidden fib or a daily fib, whatever level he's looking for, he adapts really quick. And that's what I've noticed with Brandon is he has a bunch of indicators, but all those indicators help him switch bias. But when you switch bias, you have to lock down. So if the daily fib, let's just say, for example, the daily fib helped you change bias, right? Then you want to play off of that. You don't want to switch bias off the daily fib and then go to the moving average play. Because then you're going to be like, you're going to start to get confused because not until you get more practice on combining strategies. Like I can switch my bias with the daily fib, but then I can use the moving average as targets because I'm experienced. I can do that, right? But if I'm not experienced and you're a new trader and you're switching bias with the fib and then it hits the moving average and then it reverses against you, you're gonna be fuck. Why did I fucking get in or why did I switch bias? I knew it was gonna do that. I knew it. You're just going to be questioning yourself. And that's why you got to lock into one indicator or one catalyst that helped you switch your bias. If you switch bias, try to stick to that indicator that helped you switch bias. Unless you've already experienced with moving averages and let's say the fib. And I never market unless it's going against me and I just close instead of like sell market, buy market, I just say it close. Um, Most of the time when I'm getting in a trade, I either put a fishing order out on a specific strong support or strong resistance, or I hit buy the bid or sell the ask. Those are the only two buttons that I use, other than when I'm getting out.
Yeah, because it's yeah, and it's to your point. You can confuse yourself if you don't have the ability to recognize what exit, even if you switch bias.
Hmm.
Yeah, yeah,
No, and it's really hard because you're like, well, the golden pocket's right there, but the 50 SMA is right above it, right? And you're like, I'm not gonna get in because if I use the fib to switch my bias, I said, okay, it hit the fib, it hit the 261, it's cycling its way down. So now it's hit the 161. Okay, now I'm waiting for it to break the 100 and then possibly go down to the golden pocket to get in to go long. And you're like, the 50 SMA is right above the golden pocket. And it hits the 50 SMA and it rejects or it bounces, right? It bounces and then as the price action starts to coil where it's creating lower highs, but it's also creating higher lows. And you're like, fuck, I don't know what it's gonna do. And next thing you know, you get in at the 50 SMA, and then it goes down to the golden pocket, and you're already fuck. I knew I should have just waited until the golden pocket. And that shit can happen if you're trying to switch bias and use different indicators. But if you have experience like Brandon or Connor, and let's say Connor, you use the fib to get in, but Connor has experience with the anchor VWAPs, and the anchor VWAPs line up with the 50 SMA. And if you're a new trader and you don't use anchor VWAPs, you only use the moving averages and the fibs, you're like, well, why the fuck did it bounce at the 50 SMA? It's because there was anchor VWAP that coincidentally lined up with it, but you didn't know that, and it goes against you, and you're like, "Fuck, I don't trust this," and you just start to confuse yourself. So I hope that kind of answers your question.
I wanted to share a trade.
Yeah, go for it. Oh, let me stop sharing.
You guys see the screen?
Yep.
So this one was on Tuesday, and what I did is I so this was a gap, a SPY gap. I think it was pre-market. It was pre-market.
Hmm.
And what I'd done originally is, of course, the market had gapped up. This MES, the market had gapped up, and I was like, okay, draw my fib to take advantage of the gap down. But I'd never, I'd never played the gaps on SPY, and so again, going to consolidation of um, you know of variables to know what to play, at least the best to play. I said, hey, look,
Hmm.
you know what? Let me try this. And so what I realized was right at my point of entry is where price action had pushed lower and was sitting right at the top of the gap. And so what I did, I literally just used the gap, and not necessarily this fib. I entered. Of course, I looked at what's this
RSI.
RSI exactly, and then also looked at MACD and Semper. Of course, I thought about what you said last time. I was looking at the histograms as well, and then I said, okay, well, let me just get into this point. I typically draw,
Well,
channels
yeah.
exactly, just to help me from a visual standpoint.
Mhm.
And in this case, it actually helped me. It gave me a little bit more comfort looking at the gap on SPY and having it just a little bit lower. This is actually my 100, the 100 EMA, the green line here. So just a little bit below the 100 EMA. And so that was my target, got out. And generally speaking, when I have a moving average as my target, of course, Brandon suggests that we stop short of it. At this point, I was comfortable just stopping right at the gap, and of course, you saw the market dipped, and then it just went back up. One of the things I wanted to bring up was, let me see if I can change the screen. Hold on, let me just stop this share first. So, you see me?
Yep, got it.
Okay. All right. So here's another one. The volume area profile. So I was also looking out for this.
Mhm.
I noticed right during price action, this shelf hadn't formed,
Yep.
and it dropped below. So I was like, I wasn't really looking to utilize the shelves because I wasn't comfortable. At least I'm not comfortable yet.
Yeah.
But I want to incorporate that into my whole process. Now, the question that I have is, do you typically wait until like maybe, after the market has had some time to play out, because then these shelves form? Because this one hadn't formed, and if I was just primarily just looking at a volume shelf, then
Mhm.
I may have gotten confused because I saw this gap here and then this one. I'm like, okay, we got some room
Yeah.
over here, but then this one hadn't formed yet. So just a question more so on the volume area gap in the formations during leverage.
Yeah. The way that I use these, I'll use them as targets. Um, I like that because Brandon has introduced the waves of three, and the waves of three combined with the profiles have fucking up my game tenfold, right? So let me walk you through. So waves of three. So here's one wave, or yeah, wave, second wave, third wave, right? If you back, look back, and so here's a volume area low. So there with my mouse. Volume area low. So that's the first wave, right? So then let me erase all this shit. So off of here, you're already thinking. So you let's just say you missed this move right here to go up, right? So now you're thinking. Now you're gonna start thinking waves of three once you see it way over here. Once you see it over here, you're like, where can it make the second wave? Right? Because this is one, this is two, this is three. So if you look back, this little shelf lines up with this one. So that's lines up with two. And then even though there's a little shelf right here, that lines up with three. If you look at it right here. So right here, once it starts holding the POC, holding above it, I know my lines are kind of crooked, but
No, it's fine.
just pay attention to the orange line. If there's dojis or price action that starts to hold above it, then it should break out to this shelf. Oop, oh, hold on. It should break out to that shelf. Should. Not most of the time. Since there's a big valley and there's no volume in here, most of the time this will fly through here. If it gets over any resistance, which is like right here, it looked like POC was resistance because it was right here. But then it caused this big old gap because this. And I like that you mentioned that this wasn't there in the pre because it sometimes These shelves, especially on Tradeovate, they will pop what I call a flash. So on Tradeovate, you'll see one big old bar, just either it was already there, or while price action is going up right here, it'll create it. And then all you're gonna do is wait for price action to come back down to that level, right there, lines up.
Yeah, because this is Ninja right here. So Ninja
Yeah,
doesn't do it.
Ninja doesn't do it as well, even though I
Mhm.
have noticed that it does do it okay. And that's why I recommend Tradeovate. I don't want you guys just getting Tradeovate just because, but Tradeovate's volume profile, I love it because um it'll create a volume shelf when it's going in the opposite direction. So how can I explain that? Like let's say this shelf was being created when it was coming down, right? There's like a big doji somewhere over here. There's a big old doji that formed that because it was going down. So all you have to do is wait for a shelf, either like this one or a big shelf. The bigger the shelf, the stronger it is, obviously. Um, but you want to wait for that shelf to get retested. So it got retested here, but it didn't hold. I would like for it to hold right here. So like that, I would enter it somewhere down here, and that would be like my first target, and this would be my second target. Or maybe this one right here would be like, I prefer to see these instead than this because there's really not a valley right here. I want to see
Yeah.
a big void like this. But that shelf right there was probably significant, and it looks like it was because of this. So that shelf was probably created sometime over here in the back. I think. I'm not 100% sure. But usually that's what I'm saying. Pay attention to when these shelves form, because usually when they form is like, let's say there's a big candle right here, or let's do it like this. There's a big candle right here, a big red candle, right, with the wick up here. So this wick combined with this shelf says that there's a lot of sellers waiting there because there were limit orders. The way that Brandon explains it is that these shelves right here are limit walls. I would consider this a limit wall better than the other one. And if you look at here, it looks like it was squeezing out right here. So let's just take this for example, right? Like let's say it kind of lines up with this one. Let's say that this candle right here formed that shelf. Just this is an example.
All right.
This is not literally, but let's just say that this candle created that shelf. So what usually happens is, right, that candle created that shelf. So there's sellers there. What did I just say? That shelf, there's a lot of limit orders. Look at what happens at that shelf. Look at the sellers were waiting there because there were limit orders in this area that were not filled. And look at, as soon as it fills right here,
Market.
it dumps. So what I love to do is define these shelves and Tradeovate. I like it better because the shelves on Tradeovate, they're on this side over here. They're like over here. So what I usually do is I'll find a shelf. Like let's say I found this shelf right here. Then I'll look back. I'll look back at price action. And I'm looking for a big candle. Big candle that'll show, like for example, this red candle, right? This candle probably created this shelf. And this POC was probably created like all night. because the POC will change. Like maybe after this day over here, the POC was up here. But what I like to do is look for big shelves with the big red candle and then just look back. Okay, if price action's on the top of the shelf, then I'm looking at it as support. But if it's on the bottom of the shelf, then obviously I'm looking at it as resistance. And then you can use them as targets. Like right, you don't have no moving averages up here. You do have a fib, but see how this shelf lines up with your 50% golden pocket? That's why I would make either this one or this one my first target and then let some ride to this. And it might have tough time on this area right here because there's not really a big void like this. So right here, you might see some big consolidation over here. You're like, fuck, is it going to make it to that, to my final target? And that's totally up to you to determine how the candles look. And if you're having a hard time identifying a strong candle, I highly recommend going to, or at least looking at the after hours chart, because the after hours chart allows you to identify a strong candle from a weak candle. Like after hours, you'll see it's really slow. It's fucking boring as fuck. I know. But I highly recommend it because it's ultimately going to help you trade live hours. I mean, even like 9 p.m. or midnight Pacific Standard Time, action's already picking up. Like it slowly starts to pick up at 6 p.m. Pacific Standard Time, and then it ramps up at 9 because that's when the euro opens, I think. And then it like the Asian market closes at midnight, I believe, or at 3 a.m. Pacific Standard Time. It'll close, and then the euro will stay open, um, and then it's only the euro, and then once the New York opens, and then the volatility really starts to pick up, and especially if there's data. If there's data, the after hours will be volatile. If like say because the market likes to set up the day before. The market will help you. The market will help you kind of give you a bias or kind of indication of what market might do the following day. When I say setup, it means the opposite. As the market is not going to do exactly so. If they push it up after hours, the day before, well, it's technically the same day, right? Because it only closes for an hour. If the market starts to push up like all night, then for pre-market the next morning, it's probably gonna pull back to a significant level. And you want that because it pushes it up all night. So now you're expecting a pullback so you can get in long. And most of the time it works. Or if it does the inverse, if they dump it all after hours, then they're probably gonna pop it up. And that was with like yesterday. Lasagna Cat is how'd you determine the dip to rip? It's because they already had pushed it up all night last night, and they should have pulled it back because the moving averages. And this is why I said in the chat, it's like I want to pull back to the 666, or I want to pull back for SPY to close that gap and then rip. That's why I had asked Brandon and I asked Connor, like, do you think it's gonna dip to rip? Because the way that all the moving averages were stacked like Lasagna Cat likes for it to go down. And on the 5 minute, we missed the 5 minute 666 by like 6 points. and the SPY gap didn't close. So I was thinking dip to rip because I had just pushed it up. And usually, and these are characteristics that you want to identify. Because I've traded ES. I've traded ES for a couple of years. So I know all these little characteristics that it likes to do. Like I told Toad, well, I told everybody in our group, like, pay attention to what price action is doing between 10 a.m. Pacific Standard Time and 11:30 a.m. Pacific Standard Time. Because if they're pushing it down during that time, then what do you think is going to happen for power hour? They're probably going to pop it up. Or the vice versa, if between 10 a.m. and 11:30 they push it up all day or that time, that window, then they're probably going to dump it for power hour. And then the last 10 minutes of the market or at the bell, they're going to squeeze it back up. And you'll start to see that. And that's what I want you guys to identify is the characteristics. Because Brandon, when we first started Elites, Brandon would always say, Tesla likes the 200 moving average. Apple likes a 100 EMA. Like every stock, every indicator, whether it's NQ, whether it's ES. Like we all know that ES respects levels a lot better than NQ. NQ will pass that level a little bit and then go down or up or whatever. But it usually passes that level. Where ES will kind of respect it or shy that level more often than not. And that's what you want to identify. You look at this market every day, right? So you should be trying to pick up these patterns. What does market like to do after hours? Okay, if it pops at the bell, then we know there's going to be a pullback after hours, or there should be a pullback. If there isn't a pullback, they're going to force it up after hours. Then what do we think is going to happen at the open? So you have to take it in small chunks. All these windows, right? The Asian market, what's it doing? All right, when the Asian market opens, it sets a new low or sets a new high. Okay, and this is what I learned from ICT. Um, is that the Asian market sets a new low or sets a new high. The Euro market takes out that Asian low or that Asian high. Once it takes that Asian low, then it's gonna pop up and it's probably gonna create a new high, right? So then the Euro market takes over the Asian market, creates a new low or a new high. And then the same thing repeats itself again. Okay, Asian market or Euro took the low, right? If Euro takes a low and creates a new high, that means that most likely New York is going to take out that high and then create a new low, or vice versa. And then put it all together, what's going to happen during market open? Okay, let me see where price action is and how do the moving averages look? Does it look like the 200 is going to cross the 666? Or does it look like they're all pointing up? If it looks like the 200 is going to cross the 666 and price action is in between the 666 and the 200 going down, then most likely they're going to pop it up one more time to go up and tag the 200 to pull down the 200 to cross the 666. And that's what you want to identify, all these characteristics. And they're going to help you kind of get an edge on the market. I mean, how do you guys think that Brandon predicts these so good and so often? Because he knows the characteristics of the market and what they like to do after hours. Like I said, if you don't watch it for the first 3 hours of the open. Watch for it for the second 3 hours of the open. Because once there, like I said, at 9 p.m., which is midnight Eastern Standard Time, the volatility starts to pick up. And you start to be like, okay, the euro just set a new high or the euro just set a new low. What's going to happen? And then start looking at price action. Is it creating lower highs or is it creating higher lows? And then start looking for your play, whatever play it is, whether it's a fib, moving average, or Keltner channels, anchor VWAPs, standard dev. There's a bunch of different plays, and each play will have their own um, style, I guess you would call it. But definitely look at how the candles start to practice identifying what a strong candle looks like and what a weak candle looks like.
And in essence, just to be sure, I'm thinking about the same thing. So strong meaning like if it's like a doji, either like a you know price action moving up, price action moving down type doji. Is that what you mean by strong? Or?
Well, a strong candle would be like a full body candle that smashed through a level, right?
Oh, okay, got it. Okay.
Like, is there any right here? See, like right here, it kind of starts rejecting the POC. So those kind of candles look weak because they started going smaller and smaller, and then they started changing color right here.
Yeah.
So, but if you see, like, let's just say this candle right here, like busted through that level and it closed above it, that's stronger to me, right? But a good way to identify a strong candle is, let's just say it opens. So let's just take it in stages, right? So it opens like this, right? And it goes down like this, and then it stays like this red because it opened like that, right? And it stays like this red for, if you're looking at the 1 minute chart, it stayed like that for 45 seconds. 45 seconds out of 60 seconds, it stayed red. So you're like, okay, that looks like buyers are holding it down, right? So the next candle, it might pop up like this, but then it looks like this. It just made a wick, right? Oops. It just made a wick, and then it's red, and then it closed red. So then you're like, okay, and then you see the volume profile over here, and it held below it. It tagged it, and it held below it. So now you're thinking, okay, the next one's going to be a big red candle, right? But if that's opens like this, and then it's red, and then this one stays green, but it's bigger, you and that's another thing. Well, after hours, you will see the volume. So let's say we have two, let's just say this one's red. That's a red candle. And then we have another doji with another candle that's the same. And this is what I want to help you guys identify is, let's say that level held the POC. Let's just pretend this is a POC. But this red candle has a small red volume, and green candle, this green candle, right? Oh shoot, I just erased it. This green candle, let's just say this one had it like that. But this green candle, when it opened, you seen the volume almost match the red candle, and then it's green, right? And then it pops up a little bit more. But and this is what I learned when I was teaching my friend on Wednesday, was I was teaching them how to read candles after hours, and you see that flush, you see that rush of buyers or sellers come in because the candles are developing and they're the same size,
So the volume is different.
but this red volume, it went up slow. It went up like this, right? It went up really slow. But this green candle, you seen the volume and it just popped up almost immediately. You're like, whoa, that was a rush of buyers coming in, right? So then the next candle is like this, but you have a big buyer beat. It's a little one, but it's like a doji, like this. And it's a big green candle. You're like, oh, fuck. All the buyers came in on this candle and it popped this up. The sellers try to sell it down, but the buyers from this candle beat the sellers. So then you know that the squeeze is gonna come
Got it.
because the volume profile or the POC, it held the POC. And this is what I mean. That's what I want to help you guys or teach you guys to identify that when there's two dojis that hold the volume profile, and then look at the volume, look at the volume to see if there's volume beats or like I said, and this is why after hours it's a lot easier to identify is you can see it. Like I know the candles open up or they're created slow, but the volume, pay attention to the volume because you'll see it like, okay, the buyers came in. Um, and then you can be like, okay, the next two candles, it should squeeze. And I have an example. Let me steal your share real quick.
Sure, I'll stop it for you. One sec.
Hey, Semper, how do you identify a POC?
The POC is the longest candle.
On the whole chart or
Yeah,
just
yeah, the
in
whole
that
chart.
one channel?
Yeah, the whole chart. The whole for the day. And that depends on what what volume profile indicator you're using. If you're using Tradeovate, NinjaTrader, or TOS. Some of them will be the same, but the POC can always change. Like the POC on this one, hold on a sec.
There's
Let's say the
also
POC is right here, right? But price action is going up and there's more buyers and sellers over here. So then it creates a new POC up here.
Mhm.
Um, but I wanted to show you guys this play because here's a two little dojis. Look at the volume. It was coming in, the TTM, the sellers were getting out of the way. Right here, there's RSI divergence. Um, and then look at how it lines up. Ah, look at how it lines up with the PLC right here. See this, not the PLC, but a volume shelf right there. See this one right there? It lined up right here. And I noticed those two, it was holding that volume profile. There was 100% fib that I had fibbed out from over here. And it held that zone right there. Even though there's a big red candle, this big red candle, and once you identify this type of candles, you already know like um that it's not gonna scare you out. 'Cause remember Lasagna Cat, you guys like, well, how do you guys not get scared of these red candles? You gotta kind of identify. So there's three things right here, right? There was a fib right here from this level because there was like a candle right here or something. So there was a fib there, right? That's one thing. So this is one. There's a falling wedge right here. And I like that. Hey, up, what was it the condo? No, that was up cap, right? When you draw your zones, look for waves of three, right? Because if you look for waves of three, it's gonna help you not get in at the wrong spot. So this is what I mean. So let's say I'm in right here. I'm not in a trade, but I'm looking at price action right here and then right here. Right. So it's price actions right here, and I'm looking at this shelf right here. So once it breaks that shelf, right? and this is the first wave. And like I said last time, like I showed you on your trade, um, up gap is if I'm right here and price action is right here in this area, where do I think the second buyer wave is going to be created? It's either going to be at the 100% fib, which coincidentally right here lines up with this shelf right here. Right? Look at it lines up with it. So let's say you missed it here. So now that's two buyer waves, right? Ouch. Fuck. That's two buyer waves. So now you're looking for the second seller wave. Where can the second seller wave be? Right here, because that shelf. And what does it do? Create that shelf, right? So now you're asking yourself, where is the third? Where can the third buyer wave be created? That would be at the 50% fib, which is right here, right? And then that coincidentally lines up with this volume shelf. So I'm not going to get in here because it didn't break my falling wedge, and that's a bad spot to get in. So when you draw your channel, up gap, your best location to get in would be on this line right here, right? But how do you know where? Can it be down here? Can it be right here? You can tell by either your fib if you use fibs or your shelf. So you get in on that shelf, comes down, and it's just holding that shelf, holding that shelf, holding that shelf. And now you know that you could have got in right there because it held that shelf, and it should squeeze. If this does not happen, you should be cautious because it can do this and go down. It can pop up and then continue going down. And then you want to pay attention to this. Can I go down? Hold on a sec. Let me remove all these drawings real quick. This is where the MACD comes into play. You're like, I didn't get scared because of here because I knew that this wave right here did not beat out this wave right here. Then I started seeing this MACD flatten out and start to point up. That's how I knew how I got in right here. But when I got in right here, my target was the 100 EMA. At first was the 50 SMA, but I just held because the 10 SMA was steep. Even though we got this pullback, the 10 SMA was still pointing way up. So I held through this because I knew that usually when there's fat freaking volume profiles like this, what usually tends to happen is at the bottom right here, at the bottom shelf right here, it'll have a speed bump, so it'll chop. But ultimately it's gonna go up to here. And sometimes when you get up to here, if it doesn't bust through, then it's most likely gonna come back and do this or consolidate right here. And then go up to like right here to the 200. And if it gets past that, then it can go all the way to this area. Even though this is small, you would always look back to see if there's any candles like big one. This instance, you would look for red. You want to see red because if you see a small red candle like this, then you know that that resistance might not be as strong as a bigger red candle. If you see a red candle like this right here, then you know that it's probably gonna bounce and then reject And then if you see a bunch of small candles right there, it's a toss up. You don't know if it's going to go up or down, but hopefully these other indicators right here will help you make that decision. So I hope that answers your question. I
I have
know
to
I
go
get
back and listen to this whole
I
thing
get
again, man.
I get long-winded,
Nah, this is needed.
but I like to over-explain instead of not give you enough information. And same goes for gaps. Like if there was a gap, sometimes in the after hours, there's small gaps that are created on the 1 minute. So if there was a gap left right here and it hasn't filled, then you know that you can have a play for it to go up and fill that gap.
Got it.
And like one of the easiest plays on futures, if futures opens up in a gap up or a gap down, then wait. Either you're gonna get up at the top. If it opens up in a gap up, then you can look for a resistance point to get in to go down to that gap close. But remember the rule that Brandon says is most gaps don't fill on the first tag. Usually it takes a couple of times to tag it or bust through it before it fills it.
On this one, I can validate Semper. It says most gap not only doesn't fill, but ICT them, they say most gap would usually fill, let's say, at top 50% to 60% before reversing.
Mm-hmm.
So, and then I did test it out a few times and it seems to be working, by the way.
Yeah, and just note that you want to take these notes down because eventually you're gonna have those mental notes in your head and you're gonna be like, oh no, there's a gap. I can't get in right here until that gap closes, or
Yeah.
this is too high, or this is too low. I can't get in right here. I can't go in short because it's the bottom. And trust me, I either hear Brandon, oh, I'm getting in long right here. And it's like for me, I can't get in at that location because it's at the top. Like Brandon, sometimes he'll get in like right here, and I'm like, yeah. I mean, it'll still play out in Brandon's favor, but because price action is like at the top, right? We don't have none of this. I can't force myself to get in. Like I would probably get in right here instead because it's a pullback closer to a moving average that I know sometimes is support.
Yeah.
And you'll start be like you it's funny because when you're about to get in a trade, you're like your brain will stop you, be like, nope, it's too high. You can't get in along here. You're getting FOMO. And you just keep practicing those rules. If you break those rules, you're gonna start creating bad habits. But if you stick to those rules, you're gonna start creating good habits and be like, your brain is gonna put you in check. Even though your hand is like trying to think ahead, your brain will be like, no, 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 don't push that button because that's not where you usually get in. You usually get in on a pullback.
Yeah.
And that's probably the hardest thing that I had to get used to when I first started training or when I first started trading Brandon's strategy. That pullback confirmation was one of the hardest things to to uh to get down because as a new trader you see this candle right here and you're like, fuck, it's just gonna go way up here, and then you end up getting in like right here and then this shit happens and you're like, fuck, I got in way up here at the top. Why would I do that? This would have been a better location to get in, even though it continue going down. You
That
always
was me
want to.
back then, by the way. I love to try to time the top. Now I've been saying waiting on my pullback high. So
Yep, yep,
yeah,
and
that's the pullback high right there. I see it, recognize it.
yeah, right here. And
Yeah.
you want to get used to trading that way. If you get used to shorting longs up here,
Yeah.
or I mean, not like I mean, getting long, getting long up here. I'm telling you,
Getting short.
I'm telling you, I'm telling you, Because I've been there. If you get in, like, let's just say you get in right here, and you're like, it's gonna go up because it's flagging up, right? It's like
Mm.
a little flag, and you're like, it's gonna break up. Ah, you can be like, and then it goes right against you, like almost immediately. I've been there so many times, so many times. And then the best location to get in is where you see a good shelf. You see a good shelf. Like these little ones, I call those speed bumps. This one right here was probably created because of this. And that's what I mean. See how it's going down?
Mhm.
See how it's going down, but the shelf is created already? Remember I said the shelf is created in the opposite direction. So like I said, that little shelf was probably created because of this. Because it wasn't created of this, right? So you know there's sellers right here waiting. Because the way that I see it is it's a red candle, it's a shelf, so I think there's sellers right there. And that's why I always tell you guys, hey, if it breaks this level, it, it's gonna dump. Or if it breaks this level, it's gonna squeeze. Where I get these levels are these little peaks right here. All these little peaks. And sometimes I use like the last little peak. So I know that if price action right here, right? If that price action would have broke above this and held above that level, then you know it's going to squeeze up to this level right here. And if it gets above that level, which lines up with the 200, if it breaks above that, I would expect for it to go like this, come back down, and then go up to the 666, which is probably up here. And the reason why I say that is because it lines up with that. Remember, the volume profiles tell you where the fair price is, right? Where the best price is to get in or get out. If you're short right here, you want to go to this. Obviously, your first target would be right here. Because let's just say you got in right here, where Easy likes to call the tops, right? So if you got on right there, I would be looking to close at the 50 or at that volume shelf. And the reason why I say either or is because you want to see strong candles. So I see this strong and I see this strong, right? So if I see this big red candle right here, and then you got to see how this candle right here developed. Did it smash through and it held right here, it held right here, it held right here, and then went down? Because another rule is the last 10 seconds of the minute candle, it goes in that direction. I mean it fills that candle. And if it fills a candle and it makes it look strong instead of like a wiki candle like this, then you know that um, it's probably going to be strong and it's going to have continuation. Right here, these type of candles right here, right? This long wick, it tell you if you start to see this, they tell you selling pressures coming in, right? There's two examples, one right here, one right here, where you start to see a lot of wicks, a lot of big upper wicks with hardly no buyer wicks, right? There's hardly no buyers. And even in the buyer wicks, they're smaller than these are buyer wicks, the ones on the bottom. Seller wicks are the ones on the top, right? It's going up. I'm seeing a lot of wicks and I see divergence. The RSI divergence combined with bigger upper wicks, what's going to happen? It's going to dump. Look at it right here again. Big upper wicks. It was kind of diverging, but even it was like a double top here. Um, but I like this one better because I don't even know Because that happened, right? That happened on that red candle, and then it dumped. So that's what you want to combine. You want to combine, look at over here, bigger buyer, well, kind of more buyer wicks, so pressure's coming in, and then look, uh, and then kind of, well, that's divergence, right? Because it's higher, and then it squeezes up. So just combine those, and it'll help you kind of decipher the direction that it might squeeze or dump. Question?
Gotta go back and listen to this 10 times.
Yeah, take notes. I know, like I said, I'd rather over explain and be a long video than not give you any information. And then you're like, I want to try to give you as best answer as I can, pretty much. And I'm sure if more questions come up off of that, then shoot them my way, dude. I'll try to explain it or find examples of how to like explain it better. And same goes with Brandon and Connor.
Yeah.
Ask them. I've asked the same question probably like 20 different times, and every time Brandon has answered it a different way, and every time I've got a nugget out of it. So I'm just getting that much closer to Brandon's fucking level. That I'm getting better at identifying squeeze points. Like that was like when Brandon was able to fucking call out a squeeze within that same candle or the next candle, I was amazed. Like when he would say, "Oh, it's gonna squeeze right here," or "It's gonna squeeze in the next two candles," and lo and behold, it would squeeze. I was like, "Fuck! What the fuck is he seeing?" And he would always say, "Oh, it's a gut algo, and it's this and that." And slowly he would be like, "Okay, if you see two volume bars, um, if you see like, let me see, if you see like, where's a good one? See like right here, there's two volume bars that are really small, and then it squeezes. But I really like to see like this. Oops, where it goes down and then it goes up. Where it goes, where the volume, most of the time, the volume will get sucked down before there's a huge squeeze. Like right here, I know you could barely see it, but there's two little volume bars, and then the dump happens. And then look, big old red candle. But pay attention to that. And then there's other little tidbits and nuggets that he'll drop. Like he had the TTM indicator in there sometimes. Um, yeah, but mainly volume bars and then volume profiles. Luckily, we recorded this, and you guys can go back. And any recaps or any other questions? Zycat, you have any trades you wanna go over? Luna Cat.
Hey, how are you guys? Can you hear me?
What's up, Luna? Yep, we got you.
Good, good. Yeah, I was off for a while as you know, but I'm back this week. Um, so I just was able to join because on Friday I have commitments until
Yeah.
3 o'clock. So basically, what you're saying is gold. I'm starting to listen carefully to what you're saying, especially when about the FOMO and trade at the top.
Hmm.
And it just improved them like really like 100%. So now things are a lot better. And still the greed is there sometimes, and you don't want to miss on an opportunity. Another thing I have started to do is use like with the Wix and data and stuff. I that's it. I'm not touching this anymore.
Nice.
I yeah. a couple of days ago, I did really good. I had like 700.
Awesome.
Yeah, and
Hopefully
then
that was on your real account or your PA account, or
no,
or
this
you
is
or you passed your eval.
no. I passed my eval already, and I'm
Nice.
on the PA account, and I made $700. And then greed came in because there was data at 5, I think, or 4:30 or something, and I saw a big candle. I think this is the one actually that's on the screen right now.
This big red one.
Yeah, so I thought, oh, it can't go further. I'm gonna catch it. It's gonna come back. At least gonna trace a little bit. I went in and it dumped back down.
Yeah, with the data,
It hurt so bad.
something that's gonna prevent you from doing that, right? The way that we do it is we don't even trade. We don't even try. Like for the longest time, you can ask Lasagna Cat. Um, Brandon would say, "Don't trade. Get out of a trade before data. Don't trade it. Wait for the 5 minute candle to close." Which
Right.
this one would be 1, 2, 3, 4, 5. So like right here,
Yeah.
that whole candle, and then fib it. So if it's red, you fib it to the downside.
Down.
If
Yeah.
it's green, you're gonna fib it to the upside. And then don't fucking trade it. So if you would have fibbed it out from here to here, this probably would have hit the 60%, or maybe, yeah, it looks like it's 60 because 50 would probably be like right here.
Yeah.
So wait, like as soon as you start seeing this pullback, you can fib the 5 minute candle, or just fib. What I usually try to do is I try to get this pullback candle,
Hmm.
that green candle right there. I'll fib
Yeah.
it from there to there, and then, but either way, it's gonna work, right? This is either
Yeah.
gonna be 50% or it's gonna be 60%. Um, or another way you can do is just fib the body. So there's 3 ways that I usually fib, and I try to align. The one that has the best hit is the one that I'll use. So you can adjust it, especially on Ninja Trader. Like first do the body, because that's something that Brandon taught us, was just fib the data candle body. Just the body.
Hmm.
Don't do don't do the wicks. But I took it upon myself to do the wicks from wick to wick, and then and
Is the
that's
body on the 5 minute? What time frame, or
yeah,
is it the
5 minute.
1 minute?
Just the body of
5 minute.
the 5 minute.
Perfect.
5
Just
minutes. Okay.
5 minute, and then play around with it. You know, maybe
Yeah, but
one day you'll do the wick to wick, and maybe the next data candle, maybe you'll do the body, and
yeah.
see which one you like better, because
Yeah.
everybody's gonna have their own preference. Either they like the body because the body hits a 50% more often than not, or I like the wicks because it's more solid, or whatever it is, right?
Yeah.
You'll find that, but those are the three
Well,
different ways.
I learned the hard way on this one because normally those wicks when they come down they pull back a little bit.
They
and
do.
and I and I thought 10 points pull on this huge candle is nothing. So I put multiple contracts, 10 points only. Say, you know what? Let's get to 1,000 something,
Yeah.
and then I learned my lesson.
And you bring up a good point. Do you have a daily goal, or you don't?
Yes,
Okay.
as long as I get over 300, I'm happy.
Yeah, so like I told I hate to put Easy on the spot, but he'll hit his daily goal, and then he's like, "Oh, I see my grade A setup," and then he wants to play. I was like, "Bro, take it easy. You're gonna give your profits back." Once you hit your daily goal, you should be calling it quits. Like just
Yeah.
just either go on sim, or just call out the play, see if it plays out. But don't give your money back or your profits back, and then you're below your daily goal, and you're still a little sour because you didn't hit your daily goal. But I mean, green
Get
is
another
green.
eval.
You have to fucking accept the fact that green is green. If you were green like $700 and now you're green $100 because you decided to overtrade or take another grade A setup
Yeah.
that went against you, hey, green is green. Take it as a win and on to the next day. Just like
Oh,
fucking come back.
yeah. That's what I did. I thought, you know what? I learned my lesson. The problem is the trailing, and that kills you as well, because it's like $800 trailing. Yes, it's probably $600 on that trade loss, but it's $800 in trailing in total that
Yeah.
it cost me. So thank God, the next day I did good, and the day after I did okay as well. Today it was good. I reached the goal as well.
Yep.
So until I get rid of that trailing, I'm like super cautious. I can show you the trades, but it's sometimes I'm missing a lot on good opportunities, but I'm
Have
trying not to get in until like really everything lines up.
and that's the best thing to do is just like Easy said, just it's a patience game. If you're able to be patient and wait for all that stuff to stack up, you're gonna be way more successful than trying to force a trade. If you try
Yeah,
to force a trade, more likely than not, it's going to go against you. And not
yeah,
only that, but you're going to start creating bad habits. And you're never going to be able to calm down that FOMO if you
yeah.
keep trying to force a trade.
It is the hardest thing,
It is.
Semper.
It
It's the
is.
hardest thing for me personally is to stop myself from hitting that button when I'm seeing things flying up, and say, you know what, the hell with it, leave it.
Yeah. Like Brandon Noah says, rather miss it than risk it. Like you should
Yeah,
have like that a big sign on top of your computer. I rather miss it than risk it.
yeah,
Because most of the time it's going to go against you. And that's FOMO and confirmation were two of the hardest things to get over or to even like create good habits against confirmation. Like
absolutely.
at first it's hard to trust. It's hard to trust that it's going to pull back, right? You're like,
Yeah,
"Oh, the candles are so big and they're green. It's going to keep squeezing." And you hit that button and next thing you know, the next candle is red again. It goes right against you.
yeah,
You're like, and
Samper, Samper, if I may add just one quick thing, I really think that you should penalize them, especially Luna, if he does this again.
I would,
I'm learning my lesson, buddy. I'm learning my lesson. That's it.
Yeah, but with penalties, it's actually good, you know.
I wish we had
Yeah,
that shock, like
Oh my gosh.
yeah.
like we freaking my
The
mother-in-law trains her labs to go get duck, to be duck dogs to go duck
Yeah,
hunting, and they train them with the shock collar. And but
yeah.
man,
I think there are some with like
Trading
Wi-Fi
shock
and
collar.
whatever it is. Yeah.
and they're so fucking obedient after a month.
yeah,
I think I should just send you guys fucking shock collars and be
yeah.
like, you took
Electrical
a bad trade.
bracelets.
Yeah, exactly, exactly.
You're about to take
Hey,
a
at,
trade.
at least he's
That's
sending
awesome.
shock collars, not some adult stuff. So
Put it on the wrist, so
Yeah,
especially the one that's actually
yeah,
touching the mouse. So then,
yeah,
yeah,
yeah. But
yeah, that's a good
definitely,
one.
That's awesome.
Yeah,
you
I I
go
did
ahead.
the four. I'm doing like around 4 trades. I'm kind of losing one and winning three
Awesome.
each. Yeah, each, and the one I'm losing, it's because it's not touched, because I'm sometimes greedy. I keep it up. Not greedy because I put my stop on or very close to the moving average.
Hmm.
Let's say in 100 EMA or an S. I really use those, and sometimes it doesn't reach it just by a tick, and
Are you
then
are you trading NQ with?
NQs.
Okay, yeah. You have to start identifying these characteristics of either shine or like I said earlier, NQ usually passes that level or hits that level.
Well, sometimes
Majority of the time, it goes past that level. I hardly see it shy on
well,
NQ. On ES, I see it shy a lot more times.
yeah, well, it did a couple of times on me. So in generally, you're right. It does pass it, and then, but I'm very conservative. So what I put right on, and I only won one NQ. I'm not risking a $800 drawdown. So it's one NQ, and that's it. Rather
That
than going with a M and Q and wait for half an hour until it reaches that target. Until I'm passing that the trailing thing,
Hmm.
then I will go multiple, but with M and Qs. So now I'm gonna have my long target, hopefully. But until then, I just want to get rid of that trailing. So I'm trying to minimize my risk,
Hmm.
uh, and I'm letting stop. So if it goes, I'm not moving that red line whatsoever.
Yeah.
I don't care. Sometimes it touches it and goes up. I don't care. I'm just gonna let it go and just move on and go to the next one.
Yep.
Because before I used to move down my stop, and then you move it down and then move it down, and then your account's blown, right?
Yeah, or you're back holding, and yeah, it's all
Yeah,
bad.
yeah. So if it reaches it, great. Sometimes it touches it and goes up. Okay, fine, whatever.
Yep.
So far on average one off three, and so I'm happy. It's so far it's good.
Well, I'm glad to hear that you passed your eval, and that I mean, you're getting 100 or 700 to $1,000 on one contract. That's fucking awesome, bud. Usually it
Well,
takes a
no,
couple of
on
contracts.
a day, not
Yeah, yeah, yeah.
a contract. Yeah,
No,
on
no, I know.
yeah,
But
one
still,
contract.
what
That's
with
it.
one contract, you can
Yeah, yeah,
hammer
one
out
contract.
$700 or $500. I mean,
Yeah,
shit.
yeah, one contract per transaction.
Exactly.
So that's it. And my target normally is 10 points or so, or if I see the next moving average, see it like really nice where the POC
Hmm.
is really far and it's gonna hit really nicely or something.
Yep.
Of course, estimated. So it's then I keep my target with the moving average, and sometimes it goes 14, 15, great. Sometimes 20, but it doesn't matter. But as long as I'm not taking a huge risk, that's the bottom line.
I don't know why they disappeared. But one thing, I don't know if you've been here the last couple of meetings, but one thing that I've told the guys is that NQ respects volume profile levels better than it does moving averages.
Okay.
Um, so let me see if I have a picture. Hold on a sec. Um,
I know it looks nicer on Tradovate, but I
Wait
have
for
it
it.
on Trading View
Hmm.
be,
And you can
because
use
I don't
either
have
one.
screens.
Yeah,
I'm getting confused with the too many screens. Just
no, that's okay. But you gotta adapt, to what you got. Um, but they usually respect. Oh, see, this is ES. So ES will respect. ES respects moving averages better than it does volume profiles.
mhm,
But when they stack up together, it respects them really well. And NQ respects volume profiles better than it does moving averages.
mm,
So that's why I want you to pay attention. So you said that NQ has shied a level, right?
mm,
Or has shied a moving average, and you miss it, and then it goes with it. Most
yeah,
likely, when it shied it, there is a volume profile.
real volume profile. Yes,
Yeah.
yes,
So
possible.
pay attention there. Like this one right here lines up with these dojis, but it doesn't line up. See how this little one, I mean, it's not like this one right here. It's not like that one, but it does line up with these two little bars right there.
Mm,
But it didn't tag this. I I would prefer to come down here because it stacks up with this, right? And it lines
yeah.
up. So this would have been my optimal entry. But the way that I use the volume profiles, if it doesn't come down here, I want it to hold this level. If it holds that level, then I'm most likely gonna get it to go up. And since it's
Mm,
so close to the 666 and it had already busted and confirmed the 200, the next logical level is the 666.
yeah. But the thing is, I'm too scared to hold it all the way up to the 666, for example, because of I'm being afraid of the drawdown,
Mm-hmm.
the trailing. Yeah, so that's very big penalty, right?
Yep.
The other thing I just noticed, like you see, if you go to the left on your like, let's say, yeah, so let's say on that big red that you have, yeah. After, I wouldn't take anything below the moving average if I'm
Mm-hmm.
going up the 50. Like I just don't,
Yeah.
because I want to make sure it's above.
Yep.
And if it goes really up, let's say that big green candle that you have, I wouldn't take it long from after that, because I don't want to, because I want it to come back to be lined up with the 50. You know,
Mm-hmm.
I'm trying not to take a trade if it's far away from the 50.
Yep.
That's so this way, if it goes against me, it won't go too far. It will stop, or it will go in my favor and just you get the the order filled, right?
Yep. But what I want you guys to identify, and this is why I love Tradeaway, is identify spikes like this. See how this one's way further than almost like, you know.
Yeah.
So let's say this is way further than that. Identify that, because this bar right here was probably created right here somewhere, right?
Mm.
So what you want to do is wait for it to come back, hit it, look at right there, it hits it, and it lined up right with it. So that's
Oh,
what
I
I
see.
mean when it lines up with the moving average and the volume profile. That level right there is going to be twice as strong
I
than
see.
just one level matched up with one level. And like I said, these are just characteristics that I have noticed that I want you guys to start paying attention and be able to identify on your own without me telling you guys, or without Brandon telling you guys. Is like, okay, I see this level. I know that if it goes above it, I want everything to hold it, right? And I had told, I think Toad, I told him, look, we're about to get the golden cross right here. We're about to get the golden
Yeah.
cross, and and price action was already busted. See how this green candle right here busted through that 200? The 50 was pointing up, the 100 was pointing up, and I was like, okay, the 50 was like right here, and it was coming down. The 50 wasn't turning back around this way. It was,
The yellow is the your 50?
yeah.
Oh, okay, okay. Yeah, okay.
Yeah, the yellow is a 50, the orange is 100, the red is 200. This is 666.
Okay. The white one is what then?
This
Or the
one right here,
bluish?
this
Yes.
is 10 SMA.
10 estimate. Okay, okay. All right.
Yeah.
Oh man.
Yep.
Yeah, I mean, I try to take the trades closest to the 10 SMA as possible.
Yeah. Yeah.
Yeah, because
Always
I'm so
ask
scared.
yourself, where is your optimal entry? Is it,
Yeah,
if it's a 10 SMA, then identify that. So like that, you already told your brain, I'm not getting in unless it's near the 10 SMA or
yeah,
near the 50 SMA or near a volume profile or
yeah,
near a daily target or a daily moving average or daily
yeah,
fib or whatever. But you want to start narrating, because that's another thing that's helped me keep the FOMO down, is narrating the chart, just like Brandon does. I want to see this, or just talk to yourself. Narrate the rules that you have, because that was one of the main reasons why I designed the rules as questions, is so you can narrate it, so it can help you narrate the chart and help you keep your mind in check. Because if you don't have your mind in check, you're gonna force something, and you need to what was I gonna say? You need to keep that FOMO in check. That's like the number one goal that new traders should have, is let me keep this FOMO in check because I know that every time I get FOMO, I'm going to blow up an account or it's going to go against me right away.
Yeah.
And trust me, after doing it
Yeah.
so many times, so many times of it going against you,
Yeah.
you're going to learn. It sucks that you have to learn the hard way, but sometimes, I mean, that's what they say about boys, right? If you have a boy as the son, easy, take notes. Your son is going to learn things the hard way, whether
If they
you
don't
think so
fucking
or
live.
yeah, they don't listen and be like,
True.
you try to protect them. You try to protect them. Don't do that. Don't
Don't
do
do
that.
it.
Don't do that because you're gonna fucking bust your teeth. Don't do that. Trust
I
me, I
have
know.
one. I know. I
My son, I told him, don't do that, don't do that. Next thing you know, he's 3 years old and his two front teeth are missing. They're barely starting to grow back.
Oh, sure thing.
He's 7 years old now and he's barely growing back. I was like, damn.
Oh,
But that's what happens, right? Boys
yeah,
will learn the hard way. Girls learn a lot faster. Boys
yeah.
gotta do the same thing a few times. Oh, fucking burn my hand. Fuck it. It didn't burn that bad. Let me go burn it again. But yeah.
I have a
Any
couple
other
trades.
Go for it. Shoot him up.
Let's go. Share.
Just one thing I'm having a hard time identifying, and like my brain to identify, is divergence. Since I've heard the word divergence, I'm trying to understand it. I kind of understand it, but when it comes to identify it on when you do it, I can see it.
Oh,
But it's
here's a
so
good
hard to do it.
example. I love divergence. Let me turn off my some of these. Let me turn this stuff off so it looks normal. Um, I love divergence.
Well, I do
Um,
too, but identifying them is another
you-
story.
The easiest way to do it is if price action is going in one direction and RSI is going in the opposite direction.
yeah, if it's become a trend, there's like basic. I mean, if price makes a new high, like here,
Yep.
price made a new high, but RSI did not make a new high.
Yep. You
Just
see that?
simple as that.
You see how leave it right there real quick? Uh,
Yeah.
just so I can see how here's a high. It's a high, right? So it matches, right? And then this one just barely went a little bit higher. And look at RSI made a lower high. And it made another lower high. You can't see it with my yellow things, but
No, I see it. It's
if
good.
you
Yeah.
see, if the best way to identify it is, okay, I identify a high and match it up, right? So it's still a higher high because this is the second higher high. It matches, right? You have to be able to identify that. Like, okay, a higher high, higher high.
Yeah.
Here's a second higher high, but RSI made a lower high.
Yep.
You see that? So
It is.
identify that. Like you see price action going down, immediately, okay, I got one peak there, I got another peak there. Let me see how many peaks, because this should have been right here, right? Like that. But it didn't. It actually went right here. And then look at what happens. Boom. That's the way that I identify it. I don't
Yeah.
know if anybody else has any other tips on how to identify it better, but that's the way that I
Um,
try.
yeah, I think he's got to catch it, especially the 1 minute's pretty tough. And sometimes you just get fucked anyway. Was it is today? Does today
Is
have
that
any?
like a divergence indicator? Because you got a bunch of little red
Yeah,
lines.
yeah. So it's actually on the TV in Trading View.
See,
The
Luna, you might want to get that indicator just to kind of just like a training
Remind
wheel.
me.
Yeah.
Yeah, that would be wonderful. What
Yeah,
was
if
it
you have
called?
trading view, this is actually just the standard RSI relative strength index, the standard one on trading view stock. And if you go into the settings on the inputs, there's a show divergence. And normally it
Oh,
gives you these bullish, bearish labels, but I just took those off because the lines are good enough.
oh, okay.
So they're delayed,
Um,
correct?
you said they're delayed?
Yeah, I'm asking.
I don't know if they're delayed actually.
Because
Um,
I've used other ones that are always most of the time they are delayed because they have to first see it. It's maybe there isn't yet, maybe there isn't yet, so that you have to wait few candles and then
yeah,
it will show.
yeah, that um, might be the case for sure. I'm pretty good at spotting it. I haven't noticed if
Yeah,
it's
yeah,
delayed. Sometimes it's you gotta. It's a lot of times it'll be quick and like we
yeah,
talk about the rule of threes and stuff. So it's like by the time this even labeled it, if you were going in short here, it's like kind of too late.
yeah,
It's gonna
yeah.
pop you out again. Um, but this is good for a scalp win. And then here is kind of divergent from like that high all the way over there, like this RSI high, but then it just pops you out again. But then you finally get the big dump. But then the big dump wasn't even divergent. So I don't know. But yeah, go over to this trade. This one, I'm thinking, how could I have held this one longer? First of all, I actually had so I thought at the beginning of this day that this was gonna dump really hard and catch people off guard because it was a let's see, what day was this? The 25th. So this was Thursday yesterday. Right here, we had gone into a buy signal and then reversed it, or we're like in the process of reversing it. So I was like, all right, I think we're gonna perhaps dump really hard, catch people off guard. So I actually tried to short at this VWAP at the beginning of the day with something like this, um, hoping that it would kind of crush down. And got out of it pretty quick because I realized I was like, oh, I'm fighting a strengthening 15 and I'm fighting a positive MACD cross. Um, so I mean, I think that's pretty obvious. But then once I was kind of listening to the sentiment everybody was talking, I was like, okay, it's actually looking pretty bullish on the day. So I anchored the bottom of the day on the 15. And then it came down here. We had kind of a big pump, and this is where I was like, all right, I guess I think Connor was talking about how if you go, it was like this gap down is going to start us into a sell signal. And then once this bullishness happened, he was like, well, when you reverse sell signal, there usually aren't any bears left, so you can be pretty bullish or neutral to bullish. So that's how I was kind of gathering that sentiment. So I anchored the bottom, and then it came down here right towards my anchor, and had all of these candles in a row. I should have taken a screenshot of the trade debate so we can. I got to remember to do that so we can see the volume profile. Um, but then I saw that the buyers had actually taken control in the MACD, and we were right above my level, so I threw up my wide um, risk reward, which is 100 points. Try to see how it works out, and then I feel like this was pretty bad to hold through. So I got in like right on this candle or like one of these. right before big pump, and I feel like it was pretty bad. It was actually kind of tense. Like I feel like it was bad to hold through because this was like 40 points uh right here, and then it came all the way down near, and I was like, if this goes below, I'm gonna stop at break even. And then it went all the way up to like 50 points, came back down, and it went back up again. And I guess my first question is, do you think this is like just straight up bad? Does anybody think this is like bad to hold on for like what I was going for? Should I have definitely gotten out? I mean, it feels like at this point, you have the five about to cross, you have the one crossed already, the 15 cross positive. I feel like this could easily have just squeezed right up into my profit. And then when it comes back down, it felt like by the time, because like this candle here is like right on trend. This first red candle is like you can make a trend line there, but then by the time that snaps right on down, it's like, all right, well, if I close this, then I guess I would have had to wait until it came back down and maybe just bought at where I closed. So I don't know. What do you guys think about that?
I usually you said you got in right there, right?
Yeah.
Yeah, me, I'm like I always try to look left. Like religiously now, ever since it's helped me kind of identify other resistance points.
Okay.
So where'd you get it? Oh, you moved it over here?
Right, right here.
Okay, okay.
I think I've got a. Oh, dang. I'll have to find that. But yeah,
Either
right,
way,
right,
you got in right here, right? And it was a higher low from over there.
right.
Um, and I'm always looking to the first point of resistance. If there's structure right here, I'm locking in. Like, I don't care if it's, if it's 4 or 5 points, if I'm trading ES, if I'm trading Qs and it's 30 points, I am definitely locking in this vicinity right here. The rest, I'll put a trail stop. Like, let's just say the 10 moving average was like right here, right? And I'll attach my order right here. So I probably would have got stopped out right there.
Right.
And then reassess. And then reassess because it's always better to lock in a little. The way that I always, or the way that Brandon taught us to think of that is as a cushion, right? So let's just say you got a $200 cushion right here, and then you got an extra 50 bucks because you got stopped out right there. So you made 250 bucks. Instead, you would get nervous, you'd close out here, and instead of locking in 250, you only locked in 50 bucks. And then you're like, fuck, I just had 200 bucks. What the fuck?
Yeah.
And then that just throws off your whole fucking mental psyche. Like you're like, fuck, I need to make back those 200 bucks that I kind of just gave away. And then you're like chasing. That puts you in chase mode. Um, so you could have done that.
Yeah.
Or
But I was
we,
also only trading one MNQ. I only had one in the first place.
oh, you did? Then I would just lock up over here and then reassess. Like
Yeah.
if you lock in right here and then you get this, right? You get that little bounce point, draw a trend line right there. You don't need
And
to draw both
the next,
channels. You can, kind of right there and right here.
right.
And then ask yourself, where is the best entry? Okay, the best entry would be every time it tags here to go short or every time down here to go long. I mean,
That makes sense.
if you got in right here because there was the second low or higher low, then always look left because of this busted through this action. If you get that pullback over here, you know that the next one is going to bust through that.
Yeah.
Majority of the time. Majority of the time. It's just like the moving averages, right? Let's just say the moving averages is right here, right? The first one tags it, rejects it. Look at that big green candle. It blasted through it. And that's what you want to see. A big green candle, a big red candle, smoke that level. It totally smoked this level, that big green candle. It smoked both of these levels. It just smoked that level. Now you know, okay, it's gonna pull back. Once it smokes that level, you're like, okay, where's the best entry? You could have fibbed that area out, and it would
Yeah.
have probably been 50% right here.
Yeah.
So you got in right there at the 100. Okay, let me lock in. As Brandon, he'll fucking add right here. He'll add right here, and he'll add right here, and then he'll fucking just hit it home run.
Right.
But I wouldn't recommend that for newbies because it could have easily rejected this line right here, whatever the line is, and then gone down.
Yeah, exactly.
Because it's still like that, right? Because you're always seeing it in hindsight, but luckily this play worked out in your favor.
Yeah, exactly. That's how I'm feeling that it's kind of lucky that it worked out. And really, I should have locked in around 50 here and then tried to get back in. Um, the tough part is like if I go over to the trade I planned today is like
What are these? Is these a Bollinger Band?
no, these are just VWAP. VWAP regular on the day VWAP and then minus T
Okay.
plus two.
Okay. Okay.
Yeah. Well, actually, I'll go ahead and then I'll stick to this trade while I'm looking at it because then the second question on this one is actually, um, so I got my goal to learn right now to move forward learning is to essentially have these big areas, um, and try to figure out whether or not it's working, um, before and then hold my runner, hold my win a little further than one and cut my loss before one.
Mm-hmm.
Which is kind of what I've been saying in the chat. So for example, when I got in short at this top down here, we go ahead and sync it in the layout. It went, I got in short like pretty much on it, and then it kind of held this consolidation here, and then I got out like kind of halfway. You never actually really it would have kind of worked out. But I didn't. I cut it before we got to the plus two. So that's kind of the goal. So then I cut that at like half R, but then this one I held to like I think it was right here or something. So I got it at like 1.1 R or something like that. So this win totally wiped out this loss. So that's kind of the goal there. But
Mm-hmm.
then my second question is, how could I have kind of held longer? Because then as soon as I got out, actually, I was like, it got up all the way near 1R and then it came back down to like half R. And I was like, ah, shit, this is just like before. I should have gotten out. Um, but then it popped up, it consolidated, and I sold. And then shortly out, and then it did not even retrace back under 1R. And then it popped up for like 1.3R, came back down a little bit, and then just ran to like two or whatever. So it's kind of funny because this second question is contradictory to my first question. Because the first question is yeah, the answer is I probably should have here started to get and gotten back in
Mm-hmm.
on trend line. But then my second question is kind of how could I have held longer? Like maybe I guess the answer here would have been I saw this pop and I thought shit, this might keep running. I get in on a pullback, but then it's like this feels like I'm chasing if I got in around this area. Like I could have following my strategy, I could have through a VWAP on let's say I mean this breakout 1 minute that broke the high of day once that's on the start of that move, and I guess I could have gotten in right there, right? Because
Mm-hmm.
that's like perfect. Or maybe if I went to this 5 minute, this probably does the same thing. So I guess that is actually maybe
What if you would have anchored it right here? What was that give you?
my entry.
Oh, nothing.
That would have actually been great for actually re getting out and re-entering my original position. if I anchored like down here, the 1 minute is a little shaky, but that's fine. I'm trying to not really trade the 1 minute. I'm trying to like when I'm looking at trade debate, only look at the
But
fives.
you kind of answered your own question is why
Yeah,
wouldn't you had anchored here and just use that as your guide?
right. Yeah, throw this one up. Yeah,
Yeah.
that's a good point.
Yeah,
Okay.
because so you would anchored right here, right? Yeah. See, and that could have told you get lock in right here.
Yeah. Yeah, got in here. I could have locked in here. It retraced to the five, add back in, lock in again, add back in, lock in again.
Now
And
that's
wait.
super ultra scalp.
Yeah, right. That's the tough part. Is like all of a sudden, my look, I'm trying to have like simple trades, and all of a sudden, I'm getting out, getting back in, getting back out. But if I only hold the half R, then this whole thing that I'm doing is kind of invalidated.
It
You know
is,
what I mean? Yeah.
but what what we're gonna try to help you identify is okay. I got a big significant point right here, so I can obviously anchor that. Over here, you got 1, 2, 3, 4, 5 different points you can anchor. Where right here
Right.
you only have one anchor. Where you know that if it breaks that anchor right there, that it's gonna fucking squeeze and run, right? But let's say you anchor it right here. Can you anchor it right there for now, just to see what it looks like? Oh shit! Yeah. That would help you get this. So we're gonna help you identify your grade A, and your grade A is gonna give you bigger plays, right? Because this would like, let's say you would have anchored it right here, right out the gate, or let's just say that it opened right here, and you're like, okay, I got to anchor right there, right?
Yeah.
And we know that using Brandon is confirmation, right? So you anchor it there. Now you know once it tests that, it's gonna squeeze or it's whatever. Compared to if you anchor it over here, you're only gonna catch this little play. So this might be your grade B, where in this point or this point, it might be your grade A. But we'll dig deeper into that and we'll help you identify those a little better.
Okay.
Definitely. Because it's gonna help me understand the anchor VWAP a lot better, but also have another strategy to add to my, because I pay attention to the anchor VWAPs, but I don't hold them to it because I don't really have trading view, and I don't, and that's just another thing that I gotta do, right?
Yeah.
But if you're posting pictures and I'm like, okay, that VWAP right here lines up with my volume profile.
Yeah.
So then on Friday, I'm gonna be like, oh, you took this trade. You took it because of the anchor VWAP. I took it because of the volume profile. And then I entered here where you entered over here and got this little play or whatever the case is.
Right.
So like that, you're gonna be able to identify, okay, when the volume profiles line up with the anchor VWAPs, I should take that play instead of taking this play or whatever, whatever the case is.
Yeah. Makes sense. I know
Uh,
one of the important rules that Connor always meant is that first tags are premium. So
mhm.
an example of that would be on the 5 minute. This first tag over here pops immediately. So I could totally see that being a grade A. I mean the MACD, I mean the RSI on the five just came from overcool. The RSI on the five just had swapped. I mean the Mac it just swapped. The 15 was kind of swapping. The one, I don't even know. I mean, I guess the one was in the upper 50. They were broke into the upper 50. Now it's going for the retest. So I can totally see this being an A on the first tag, but then on the second tag, it kind of breaks through. It doesn't respect it as much. But that was the first tag of the 15. So then that pops off. Yeah. Yeah, I gotta work because right now I'm doing this. I'm trying to do it like one MNQ. I think I actually added at some point here, so I had two, and I took the second one off pretty quick. Um, but eventually the goal is, and I'm doing it this style because I need to have a wide. My tolerance is like when I start seeing the big negative, I'm like, I can't take this loss. It's a real bad. It's a problem that I've been running into. So I'm like, I got to have a big old wide stop. Like if it comes all the way down here, 100 points, and I lose 200 on this trade because I just couldn't accept that it was done and failing, that's fine. Like that's really fine. Like I leave my total invalidation all the way down here, and if I allow myself to do that, that's fine. And then, but the goal is to eventually grow into a spot where I can go ahead and instead of taking one, I could take like two, three, four, and then instead my hard stop is like low a day. And I need to be really okay with that. Um, so that's kind of the goal of doing that. And I see how that can kind of evolve into a grade A where I take my A here and then I don't need to have a gigantic 100 point hard invalidation. Instead, it could be like, just this.
Yep. And that's what you want to have. You want to
Yeah.
have a 2 to
Yeah.
1 or 3 to 1 or whatever the case is on your first. Another thing is, okay, like I was gonna tell Luna is you should your first trade should definitely be your grade A. Your first trade out the gate. If you don't see a grade A, then don't take a trade. If you do take a trade,
Yeah.
just be ready that it might go against you if it's not your grade A.
Right.
Right.
If it's your grade A and it goes against you, then cut it. Like you should know, okay, this is my grade A. I got in at my optimal entry. Now I need to cut it. Right? If it goes against me 2 points or 5 points, whatever you have defined as your hard
Yeah.
close. Other than that, you shouldn't because the odds, well, like for instance, like with Easy, right? His grade A was like 90%. His second his second grade was or his grade B was like 75% and his grade C was like 50-50%. It's a 50-50 toss up whether you're going to hit your target or not. So just keep that in mind that the odds are slowly going against you or on the house, the less the grade is. You should definitely not trade below your grade C setup. If you do, later on, maybe you'll have a grade A anchor VWAP and you'll have a grade A standard dev or a grade A moving average setup.
Yep.
And that's how Brandon's able to jump. Okay, I see my grade A on my anchor VWAPs, or I see my grade A on the fib. I'm getting in. Okay, I hit target. Okay, now I see my grade A setup on my moving average setup. I'm getting in. So
Mhm.
that's two grade A's, right? Instead of a grade A and a grade B, you got two grade A setups. Like Luna, he's barely learning one strategy, so I don't recommend that for you just yet until you perfect your grade A setup. Once you perfect your grade A setup, now you can add a grade B or a grade A from a different strategy. And we can
Okay.
help you identify a grade A. Because sooner or later, right, Toad, he's gonna have a grade A for his anchor VWAPs, and we're all gonna learn that together. We're all gonna learn his grade A setup. We already learned Easy's grade A setup. We already learned Lasagna Cat's grade A setup. So right there, we have three grade A setups that we can utilize. And you can reach out to that person. Hey, Toad, I love your grade A setup. Can you explain it a little better? Or when exactly, what are your rules for that grade A setup? Hey, Lasagna Cat, what's your grade A rules for your grade A setup? Okay, cool. And then you take those rules. Don't start live trading it. Take those rules, go sim trade it for a little bit, and adjust them to your eyes or adjust them to your style. Because we all have the same strategy, but we all look at the chart differently and we all create our own style within that strategy. And that's what I've noticed. Like even when me and Lasagna Cat started, I had my own fib setup and he looked at it a little bit differently. And even though both our grade A setups would hit our targets, we still had our different styles of looking at it. And that's what we're going to help identify. And that's why I love this finding your way, is because we're learning your grade A setup. We learned Easy's grade A setup. And then we're going to learn, or we learn Lasagna Cat's grade A setup.
Yeah, and like what Semper's just saying, I did this recently with Easy's A plus setup. I saw how good it was, so I was like, let me start doing it too. But I knew that I wouldn't be doing it in exactly the same way as him because I know that there's certain things I look for to go long, and I just thought, well, I know how good those work. Let me just apply those one or two of those to the short world along with Easy's setup. So I basically took Easy's A plus setup and combined RSI with it and sometimes a fib. And now it's a really confident setup for me. And earlier in the month, I was posting some recaps. Hey, I'm doing this on Sim right now, but I'll be trading it starting with one EMS, one MES, just like finding your way in a few weeks. And that's what I started doing. So I've been trading it live for the last 10 days or so.
Awesome.
Yeah.
Awesome.
Yeah, I think focusing and trading with like one. I remember, yeah, Semper, you saying that last week, and then actually I remembered how Lasagna, you were saying you were doing that for your short setup trading with one, and I was like, you know what? Like I've blown up too many fucking PAs. It's time to step back and just trade the one. Um, and it's really a lot better. I stopped trading the RSI divergence. I forgot to take a bunch of inside bars, but you know, and I'm learning a lot about what I want to do.
Awesome. And you're just going to learn that much more. And you're going to be like, because like I said, a lot of new traders, they start jumping strategies. Oh, this one didn't work for 2 days or 3 days. Fuck, I blew up an account.
Yeah,
This strategy is not for me. When you shouldn't be doing that, you should figure out the inefficiencies or the weaknesses in that strategy and align them to yourself. Align them to your style, because like I said, everybody has a different style. And if you keep strategy jumping, it's just gonna set you back that much further. What instead of, okay, let me take this strategy. I like how it helps me identify the chart a lot better.
yeah,
I just need to perfect it. I just need to fine tune it to my style. And that's
yeah,
what I came to realize with the moving average or the fib or the anchor VWAP. But what I use to perfect my moving average strategy, I used the fib, but the fib was only to nail down my entries and my targets. That's what the fibs helped me. And I told you guys that the fibs were my training wheels, because the fibs are awesome because it has your entry at the golden pocket or at the 100 fib if you're, going long, or it also has your targets and your stop out as well too. So maybe you need that for a little bit, put the training wheels on. I identified a pattern, as that's your whole goal is identifying patterns. Like, okay, I anchor this VWAP, I fib out the first leg, the VWAP lines up with the golden pocket. I know that if the anchor VWAP lines up with the golden pocket, I know that bounce is going to be bigger than if it hits just the VWAP or if it hits just the 50% fib or the golden pocket.
right.
So that's what you want to get to that level. So Another thing is a lot of new traders want to chase the holy grail. Oh, this guy, and a lot of YouTubers are like, I got the holy grail. I cracked the code, or this is a 100% probability strategy. And in reality, I don't think there is. I mean, unless you got the Aladdin, like that freaking algo that Charles Schwab or one of the big brokers uses.
Yeah.
Um, but yeah, just concentrate on one strategy, and it seems like you're resonating more with the anchor VWAPs, which is something that
Yeah.
I like because it's even though Connor has gone over and over and over it again, I still can learn more.
I'm a little more, I probably shouldn't be messing with his strategy, but I mean, I'm trading with NQ in the first place, which is already like he trades it on ES and SPY. Um, and one of the things that I'm doing that I'm taking a kind of liberality or whatever, being more liberal with is choosing on what to anchor a candle to. Because normally on his system, like if I go and if I remove all the drawings on this, he would be like, all right, we entered buy signal here. So anchor the move that broke the 10. Well, I guess maybe I shouldn't. I don't know if it's going up, but where the video is going. Um, but then wait for these to kind of get tags. Um, but I'm like specific like VWAP, specific order and stuff. But I'm being a little bit more liberal with it. So like I saw that we completely reversed into an up into a buy signal and on this like basically this grind up and then this data candle overnight. So I just anchored to the bottom of the data candle. Um, and this was going to be my trade today, but I actually missed it um, because it just I was waiting for it to tag, and then it just barely tagged. And honestly, I don't think there's really any. I don't know if there's anything I could have done about it. And then I felt like it was gone because it came down. It just barely didn't tag. It did tag actually on NQ. It went below it on NQ. Um, but it just barely didn't tag and then boom it's like what is that like that was a I go over to the 930 that was straight away 669 to that was a 50 pointer candle right here. So at this point I felt like the trade was gone and I got into my head that it was already missed when really and I'm about to answer my own question. I should have anchored that move and I could have gone in and caught the continuation. But the problem is it, and then yeah, I guess I could have just moved my whole thing up and I still would have caught my 1-to-1 and further. Um, so I guess that's how I guess I could have done that.
From the looks of it, I think the steeper or the more defined low or higher low or lower high or whatever you call it. What do you call these? Like, what would you? What does the rule say to anchor? Like you just said, the break of the 10 or some shit.
Yeah, so it depends on there are a lot of different rules. So it's like you anchor a significant move. The anchors represent the volume and of the market participants that created that move. So so when I anchored this data candle, this anchor is supposed to represent the absolute low of the volume of the participants that engaged in this data push.
Yeah.
So yeah, for sure. Like the more powerful the candle, I took volume off my charts because um I was trying to do some volume looks, but then I was like, I'm just gonna focus on what I'm doing and not worry about volume right now. But I imagine like higher volume candles are more important, the bigger candles are more important. So like so candles that start a buy signal or the candles that start the move that break the 10. Um, so like that would be this one. And then the one that actually started the buy signal move would be maybe that one, but then that one already got interacted with. So maybe that one, but then it looks like that got interacted with. So then maybe this one at this point would be the most significant. So when price eventually comes down to touch these, it'll probably bounce it like here. Um,
Yeah.
but how I'm kind of using it and how I just used it for on the 1 minute chart is it's just yeah, significant candles. So like this candle came down, touched this price, and it absolutely skyrocketed. So you can just go ahead and anchor it.
Yep.
And if this is legit, then it will hold it, which it
Yep.
did. Um, and it never even, I mean, it never even came back to the five. Never came back to the five all day. Um, but yeah, I should have done that, and I'm glad that even though I'm answering my own questions is good, but I'm glad that I'm going through them because what I then tried to do because I didn't catch all the move. I hopped in somewhere. I don't even remember where because I think I kind of FOMO'd in when really I should have made a plan here, made another risk reward section, etc. But what I tried to do is actually wait until it touched here and then go for a short. And then what else? Move that out of the way. And then what happened with that is it shied it, so I didn't get in. All right. Even and then it gave me like a 50-point move. And then it eventually came up and touched it, and I went short. Um, try and do that. And then very shortly after was like, why am I going short against the because this morning I was like, we're going to 1800 or whatever today, kind of being exaggerating, but not really. I mean, it really only had to grind up a little. If instead of breaking down, it ground up a little further, I mean, 1800 would have been just right here. Um, but yeah, and then so I think my goal with these longer term plays is to try to be totally on the right side of the trend and catch the longer term moves and the real swings, the real squeezes and stuff. So one thing I need to make sure I don't do is ever try to, if I miss my trade, I need to never try to counter my trade. I was like, my trade is done, but really my trade was only done in my FOMO brain. It wasn't actually done in the market. So I had no real reason to go short, especially when this 15 closed above. Because when it closes above, that's a signal that it's going to continue. It doesn't always, but that's a signal that it's going to continue to the upper distribution band. Um, so yeah, that's just something I got to remember is that, like you were saying, new traders have to get rid of FOMO. And one thing I've got to make sure I don't do is FOMO myself into thinking that the trade is over and that I should counter trade. Like, I was like, oh, this trade is done, so therefore I would have taken profit around here. So now it's time to short because as if I would have caught the exact bottom and the exact top of the market. You know what I mean?
Yeah, the
Which is
last thing as a new trader is trying to catch the bottom, and that's probably the hardest thing to do, even as an experienced trader. I
right,
definitely don't think a new trader should be trying to
right,
catch one of those bottoms or tops.
yeah. Oh, and then another thing against that short is I was fighting a fresh 15 cross and a strong five. But yeah, I shouldn't try to catch the bot except it's I mean, with the VWAPs, it's pretty damn like. I mean, that right there would have caught not a bottom, but a nice spot. And then on today, this is why especially I think the FOMO was pretty powerful because I would have had the literal bottom of the day. And then I was like so FOMO'd into thinking that I missed that perfect little trade that I tried to catch the top out of nowhere, just off of the top of some of the pre-market candle, which is not that strong. So just shit to think about, especially kind of fighting the MAC crosses and stuff. So yeah. So that was my two from the last week. I don't remember what I did on Wednesday because that was today, Thursday, Friday. What did I do? I think I actually did take a long on this day because I saw. I like to. One of the things I don't know how good it is, but I like to anchor the pre-market um, bottoms, and if those start holding, kind of use that as like a signal for where it's going during the day. So I think on this day I took a long and actually was in favor here, but I don't quite remember. So yeah, that was the four trades. I guess I just went over two losers and two winners, but it's doing exactly what I had intended when I was like, "Fuck it, I'm just gonna go to this longer wide thing," because both of these winners, even though I missed this one, would have easily canceled out the losers as long as I cut the losers just a little early and held the winners just a little longer, which was very doable in both of these instances.
Yep.
Like this one, if I had caught this one, this would have been easy to hold for a little longer. Maybe I would have gotten out for my one, like God, damn, that's 100 points real quick. Get out, grab back in on the 1 minute, and
Yep.
then ride it again. And then yeah, so I think it's going pretty well. I'm glad I'm focusing entirely on this.
Yeah,
And
awesome, man. We're just
thank
gonna get you that much better and fine tune this strategy to your liking and your style of how you interpret the anchor VWAP. Is even though Connor explains it over and over again, we each kind of um, see it differently still. But
yeah, and I'm glad it's helpful. Easy's like, come on, man, can you set this chart back up the way that it was before?
yeah,
And I was like, yeah, bro,
well,
100%.
that's one of the best things is that we're helping each other pick up each other's strategies, and we're just adding more tools to the toolbox.
Yeah,
And I mean, that's what we're here for, is to help each other and to, be there as support and help you get better that much faster.
yeah.
But yeah, I think I gotta call it there for today. Thanks for stopping by. Thanks for sharing, and get ready for next week.
All right.
'Cause
Thank you.
next week we start Finding Your Way season 4 with Toad and his Anchor VWAP strategy. So stay tuned for the Anchor VWAP strategy. See you guys next week. Have a great weekend.
You too.
Let's go.
Bye bye.